The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is January the 13th. Already moving halfway into the month of January. Time flies. And I must apologize. I had it, I can't believe it. I had it written down at least 3 times. I had the Boston Globe article right in front of me. And all session Friday, I kept forgetting just to look down to remind myself to tell you about a fantastic concert that was coming up. I hate to do this in retrospect, but it was, I did mention it in the den immediately afterwards. And lo and behold, I did forget in the end. It was about the Boston Symphony Orchestra playing this incredible piece by Golojov. And the premiere was in 2001, I believe. The premiere in Boston, that is. Piece that was commissioned by a German orchestra by Stuttgart, I believe, and they invited this composer, a Jewish, very interesting, a Jewish composer, to write this Passion by St. Mark. And it was an extraordinary piece. I'd yet to be at the Boston Symphony Orchestra, any concert, where the audience afterwards, in a contemporary piece, a new piece, stood up and gave standing O's for 20 minutes. They did about the same thing this time, maybe about 10, 15 minutes. And it was, this time was even more exciting. I had the pleasure of taking my daughter because this is kind of the cultural exchange was something that she's very interested in because it was in Spanish and just an extraordinary piece. And I'm sorry I didn't mention it. But hopefully those of you who were in the den who got a chance to go to the Saturday performance. Now, I'm mentioning it now. I should have checked. I just didn't have time, but I believe it should be on Tuesday. In the break, I'll double check. Now, let me write that down nice and bold. I'll put it right on my computer. So I'll put down here, check, Passion performance Tuesday. There are parts, it goes through all these different periods, and the Boston Symphony players, there are some of them, not all of them, some strings and some trumpets and brass, fabulous playing, I must say. And then there's these invited soloists from Venezuela and different cultural institutions, and in fact, a couple of people from the Boston area were major players, drummers and dancers, and it was enlightening. Let me put this right here next to my engineer's notes, right there. Thank you. Check. Passion Performance Tuesday. Now, let's get back to this. Let's get to the market. Actually, there's something else I wanted to mention because I mention this every single year that I've been here for almost 11 years that I've been that I've had my newsletter here at TFNN, and I've been part of the service. I've been going for decades, and that is to the New England Auto Show. Changed its name a couple of times, changed its venue, but it's in the Boston area, down at the World Trade Center, I think. Anyway, down in Boston, in the by the port. And what's exciting about this is that last year, because of the economy, they keep saying, a lot of manufacturers didn't actually show up. They just didn't take the time or the effort or the money. This year, all 34 are going to be there, and I think this is going to be the best year of any auto show that you could have been to since 1955. I never went to one in 1955. I mean, I would have needed a little help there. But not the issue. The issue is that This is the first time American automobile manufacturers are truly in the game, absolutely, truly in the game. And it's worth seeing why, because the conductor is Spano. He's the conductor of the Atlanta Symphony Orchestra, and he conducted the first performance here in Boston, and he's done it many times around the world. That was just an answer to the question. So the fact is, I need to go right to the market, because this is a very important phase. We are in, there's only one way I can describe it. We're in bubble phase in the biotechs. When you start to see double-digit stocks go triple-digit and then double and double and double, and then when you see little minor stocks that you've never heard of, double, 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 and if you see stocks double in a day, you are getting to an area of overboughtness that can only have one repercussion, and that is at some point, and it could happen, I don't know, I'm trying to do my work right now to say, is this a bubble that is almost concluding, or is it a bubble that's going to have an hysteria of 4 to 6 weeks? Is it a bubble that's going to pull back now before it actually completes its move and has a very stiff, very strong pullback that impacts the general market? And as a result, we get a pretty deep pullback now, and then we go into another phase, and that's a phase that, if it includes the biotechs, let me run the numbers. I don't want to just do this without doing numbers. The Dow's down 18 at 16,400. It went lower, it went higher, and now it's down 17. S&P is just a little down. It was down 5.5, 6 points. Earlier, the futures were down. Now the S&P is down $1 at 1841. Not bad action. The Qs, the composite index is up 3 at 4178. The Qs are up 16 cents at 87.45. Now, this is going to be very important. I want to just show it. No, I'm not going to skip it. Let me finish this. Have patience. The Dow's up 3. The gold is up 3 at 1250. Gold is acting very well here. I consider this a tradable counter-trend rally, and then we go lower. That's my opinion. Much lower. Silver is up 0.505 at 20.28. Platinum's up 7, but you've got high-grade copper down again at 333. I'm going to be watching copper real closely. Crude oil is down, it's 91.96, and you've got bonds up 3 ticks, 3 seconds at 130 and 26 seconds. Dollar's down just a little bit. Euro is at this particular point also down. I want to show you just something here. The sideways move in the 120-minute chart has made another peak D. Well, it made a peak F before. It made it at 1846.50. That's the all-time high. The latest is 1842.50. Made at 10 o'clock on the 10th, and we pull back quite sharply. Now we've gone into a sideways trading band. That should stay for a little while longer. I'd be very careful if the Dow held for about maybe 2 hours underneath 16,390, 370 area. Probably, I'd say, even to be a little more comfortable, if it held under 16,400, that would say that it's starting to run out of upside energy. You got to be very careful. That's what it was saying. Now, even more important, I wanted to show the IYT. Now I can go to the indices that I think are very important. Look, IYT, A, B, C. This is leg C in the 120-minute chart. It is a leg D in the daily, just recycled and became leg D. Was G/C. Now it's a D. That's why we have these parallel wave counts in the Chapman wave, and a D in the weekly. It's the first, not even 2 hours of the day of a first week, so we can't really talk about the weekly other than to say, as it is right now, it is in leg D with a little doji candle, and leg D just above resistance, strong resistance in the Chapman wave inside track, upside channel, reversal area. So this is going to be very interesting. Let's go to the VIX index, because I always make a fuss about the VIX. The VIX is at a lower low. It's in the 11s at 11.92. 11.69 was the left side low. I have to tell you that the buying intensity that shows up in the volatility index is really important in my work. But at a certain point, and I would not be surprised, I said it recently when we were in the 12s, that within a point or so, I wouldn't be surprised if we start to make some kind of a top in the general market, and that the volatility index shouldn't have that much to go before it has at least a bounce. That's all. It's a bounce. So let's just consider that. I'm not giving anything right now. That isn't what we haven't looked at before. The left side low on the 26th of December was at 1169. That's the low that was in the it's a trough C in the weekly. So maybe there'll be one little slide underneath to make a trough D at 1168 or lower, and then we'll see. Now, I had a question about the TRIN, the Chapman Wave TRIN gauge, which is based on Richard Armour's TRIN index. I've had no readings in this. I can't believe it. I've had no readings at all for months, since back in October. This is the longest period I ever recall not having a reading in that. That is, you could get moves, of course, without it, but in my case, it's a very important indicator in that there are certain levels I look at that give very good examples of turnarounds or turnaround within 24 hours or the futures, etc. So that's that. And then there was another question I had earlier on. I don't know if I can do this as quickly as I should. No. Okay, I can't find that question. I will find it. This is what is very important to me. Let me just show you. INDU, this is the Dow. It's been in this trading range for a while, from between 60,588, the all-time high, and the most recent low was at 13,379. So the Dow is not yet, since December the 18th, closed under the 9-period exponential moving average. What I should actually say is since December the 17th, because it's the next day that it broke out. And KJS in the Den says, the VIX is slow, market should be screaming. I would agree with you, but you've also got to look at it as sometimes what it's doing is it's holding up the market. In other words, the market is turning over, but you aren't going to see it very easily for two reasons. One is when you've had such a powerful move for 2 years without drink of tea, so much as more than a small single-digit correction, no double digits, it's very difficult for the trend to change very quickly unless there's bad news. We've not really had any bad news, and the bad news has to be sustained. That's number one. Number two is, if you start to see this the Dow start to trade under the 9-period exponential moving average, and that moving average right now is at 16,428, that's going to say something else. I'll be right back. Dow's down 22.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back, and the Dow is down 24. Trying to hold. S&P's only down to. Remember, we've had this discrepancy between the Dow being much weaker since the opening, since the December 31st highs, and that's going to be very interesting because in terms of first week, then first days, 5 days, then first week, and then first month. There's a whole bunch of theories that goes with this. Here's my thinking, and I've spoken about it before, and I'm going to go through it again. When we are looking at the general market, I am still of the conviction that in January we're going to get some kind of a top of significance. That is of significance in relation to all the other tops. In other words, it should be more than 4 or 5%, and it's going to be a surprise. It'll be accompanied after it starts down by some kind of bad news, and I'm watching the biotechs as if they're going to give me some kind of a hint. And if that's the case, we could see them start to become really, as if they weren't volatile before, but really volatile, with some people buying at tops and not seeing these prices for quite a while to come, and other people still trying to get in or shorting and trying to play this particular phase. And this is the phase where the tide is changing, but you can still get your rogue waves that say, we might not have seen the sign at the beach that said high tide at noon, and at 12:06 we could still go a little higher before pulling back very sharply. Let's go to our first caller. We've got, oh, you know what? I didn't even look to see when the Passion would be playing. I used up my time during the break to look up the operas of Massenet. And I know Manon and maybe one other, but I did not know the one was mentioned in the Den by Peaky, and that is disappeared all of a sudden. Opera called Meditation. I might have heard it, but just off the top of my head, I really don't know. So I will check it out. So let's go to Ari in Arcadia. Ari in Arcadia, how are you?
I'm doing well, Basil.
Good.
I hope you keep your health.
I certainly do, and you know what? I'm feeling good, and a good clean of good bill of health last week, and I'm chugging along. Slow process, but I'm chugging along, and as long as I can drive again, I'm not a prisoner. So, Ari, you'd like to look at
RGLD.
Royal Gold, it's a royalty company, once traded at 100.71 in the Chapman Wave Peak E. That's 4 peaks from the most. It did it twice. It did it back in from the low of June of 2007 at 23.25. It went to 5 peaks higher, and that was 55.96 December of 2009. 2 months down. Not good enough. It wants to go back up. And what does it do? Starts a brand new buy mode at 41.19. February of 2010 goes peak A, peak B, C, D. Has a very big consolidation. And then what does it do? A single leg up to a leg E at 100.91. That was, the top was, in fact, 100.84. Whoops, I missed that in October of 2012. And it plunges down to 38.63, spikes up to 67.25, and now is just about to test the 9-period exponential moving average in the monthly, not having hit the 200-period exponential moving average. My suspicion is at some point it will, but not yet. And that's the monthly. The weekly is a nice bounce in leg B up from that most recent of 42.56. And if it's able to clear the big hurdle of 53.76 October high of last year, then there's a chance, wow, that's asking a lot of it, that it could go to 58. I'm just going to go one step at a time and say it's in leg D like a number of the gold stocks in the daily chart. And it's pulled back a little bit from the intraday high, but the MACD is very strong. Stochastics at 84%. Shorter term, it looks very strong. On the weekly intermediate term, it's improving and building a base. Monthly chart says there could be a counter trend rally, but technically it looks like it'll again, if at some point it'll test the low of 42.56 that was made last month, and if it breaks that, then the 38 to 36 area would be the longer term target. Now I'm going to ask you, you have a position in this?
Well, I got rid of all my shorts.
Okay, good, because you were short for a long time. Very good. So now, what are you doing? Are you playing the long side at all?
Yes, small long side.
Okay.
Very small, Basil.
Okay, so now there are a couple of things that I'm going to make suggestions about as a broad concept that I'm looking at on the shorter term in gold. And then I'm going to talk about what I'm thinking is the bigger picture. So it might suit the way you like to take positions. So let's look at this as soon as we get back. The Dow's down 25 at 16,411, and the S&P's down $1.08.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman, Tiger Technician Sound. Let me just finish this up here. A, B, C, D. All right, we're looking at our Royal Gold RGLD. It's trading at 50.81, down 12 cents. Ari wanted to look at it, and I'm saying to him that this is one of the better-looking chart formations on the shorter term. This is one of those that I would suggest should be a participant if gold continues higher. And now let's just do a couple of things. Number one, on Royal Gold, the weekly chart has 48.33 as 9-period exponential moving average support. And I'm going to suggest that this week there's a really good chance that on any pullback between 48.95, which is the 9-period moving average in the daily, and 48.33, there should be very good support if it does that. That's number one. Number two, if it breaks underneath the 47.10 to 46.90 area, has to be the next major support. If that's taken out, then what we're looking at is possibly, yes, sideways move because there'll be some support, but it really limits the upside. And that implies that on a shorter-term basis, Royal Gold, amongst a number of other stocks, needs quite quickly to break above 53.07. That's the 200 period exponential moving average in the daily chart. And the reason why I mentioned that is that since August, I believe it was, since peak G, that unusual peak G top in August 27th at 67.25, the following day it broke and closed underneath, on the 28th it closed underneath that particular support line, a resistance support line. Not only has that been resistance, the price hasn't come even close to it until the last 2 days trading. And once it gets this close, and it's above the 32, I believe. Let me just double check. The 200. Oh, this is very interesting. That's why I put this in. It is above the 200 period simple moving average, just barely above it, and underneath the 200 exponential moving average. So that tells me that this whole area between the previous high of 53.72 and 53.06, so that means 53.72. So that tells you that this whole area of the 53s is going to be very important. If Royal Gold breaks and closes above 53, besides the fact that it'll be the first time it's even touched the 200 period moving average, that says that within 3 to 5 sessions, the big test is going to come. Because if it's able to turn the 200 period exponential moving average, even if it's just a tad lower, even if it's at 52.30, 70 cents lower than the 200 period moving average, if it can close above there, even 1 or 2 times, it's going to say great, because you want to see it close 3, 4, 5 times over a period of 2 weeks to turn the 200 period moving average into support. If it does that, then the left side high bar of 57.94, that's pushing it a little bit. I have to go step by step, but 7 to 8 points up, I'll go step by step. I want to see how the 53s are treated. So those are the support levels, and those are the resistance levels. Now, just to tell you that the stochastic and the MACD in the monthly chart are still very, very poor. At 14%, that's not very good action in the stochastic. 52% in the weekly says, hey, that's not a bad rally. But to tell you the truth, that by Friday, you want to see the stochastic up at about 55 to 57% with the price touching the 52s. That's really the action that you want to see. So short term, this is leg D. What happened to the D that I posted in there? This is leg D. There could be a pullback. The stochastic's strong, the MACD's strong, and I suspect that the low of the day, maybe just a breach of the low of the day, which is 50.03. Very short term, I suspect that the 49.60s, the 49.60s to 49.20s will be that'll be important to monitor, but it's how it breaks to the upside. And if it can get to 51.60, it's at 50.65. If it can go 1 point higher from here over the next 2 days, I would just have to say to you that's a confirmation that the gold, and especially Royal Gold, is starting to look way, way better. And then I just want to do, if you don't mind, I want to do the gold chart because it's in leg B up and holding very nicely. Stochastic's only at 79%. I prefer it to be higher. It too is saying, based on the 120-minute chart, that there could be a little bit of a digestive move here in gold. I suspect, I just want to do the GDX as well. Yeah, I'm suspecting that gold has already made its turn and that pullbacks will be good opportunities to start. And I think you're right, small positions as trading positions, but at the same time, I think if gold itself, let me just go to the GLD, since I think a lot of people look more at the GLD than the actual spot price of gold. If the GLD is able this week, it's already made a higher high than last week. It's at 120.69. If the GLD can go to 122.30, somewhere around there. 132 was the high of the 10th. If it can go to 122.42, I'm sorry, 122.42, that will be a very good sign of strength. And I just get a little cautious on the GLD for whatever reason, if it pulls back under 118 at this particular point, that's 2.5 points down, I'd be very careful. How does that fit into your overall outlook?
Well, I view the Chapman wave. You got to build the Chapman wave, Wendell. I mean, you have to build the Chapman wave, and in order to build the Chapman wave, you got to have a down leg to finish off the B.
Right.
So I view between 53 to 55 where the C leg will start occurring. And so once.
So are you talking the weekly chart?
Yes, weekly.
Yes, absolutely. Yes.
So I mean, I really think this will be a successful weekly chart to at least a D.
I believe you're right. Whether or not it can get to the 58 level is a question that you don't have to worry about if you're in the positions comfortably, unless you're wanting to add to them. And then what I would say to you is we cannot make peak B until next week. So you've got 9 trading days in which to wait for a pullback towards the 40, as I say, that 49.20-ish area. Might even go a little bit lower. And then you can make a decision about whether you want to add, because leg D, if the way the market is, the way the gold market is held and silver market is held so far, trying to make higher stair-step moves, that's a much more comfortable thing than the sudden spike that you saw before. This is a determined move that is getting professionals in rather than amateurs, because it's not showing tremendous bursts of energy, and I like that. It's a very subtle move.
Yes, it is.
So, that's the way I would look at it. Now, as I said, if at any point RGLD suddenly breaks, and it breaks already the 48 support, somewhere around there, then you've got to say, uh-oh, maybe it's more a sideways move, and we're going to use up time more than price. At this point, it looks like it will give you price as well. And I think you need to go just step, one move at a time.
And I think it's going to be, I'm hoping that it'll be beautiful, classic Chapman waves.
If we're looking at this extraordinary leg A, single leg A up, in the weekly chart from June, the week of the 28th, to the high of the 67.25 high of the 30th of August, we should get an inside, a rectangle. I drew it high, but I'm going to draw it lower down now. One that goes something like this, and that says to me that if there is a rectangle, if it accelerates, if this move in the weekly this week can break into the 51.80s to touch the 52s in leg B, then there's a chance that the rectangle takes another 4 weeks even, and it moves to the upside, and that you will get a leg C and then a leg D, and that should take you close to the 57 to the 58 area.
Well, Basil, it's more exciting that it's A in the monthly.
Well, it's the second A. The first A, I would have to call at this point, it isn't really officially a failure, but this is really the second A. And sometimes what you get is a couple of failures in A's, and then later on you get a spectacular move to the upside. And to tell you the truth, I think that it's going to be in the second half of this year that gold really gets going again. That's just my opinion, that it has a nice move now, and then there's a sudden, whatever it is, it's just a sudden pullback, and that pullback says that it's later on that we're going to get a deeper, a stronger move to the upside. I just have to go, as I say, I have to go step by step, and right now this is a nice counter-trend rally, and I think it's a tradable one, and you're absolutely right to be looking at it that way.
I appreciate it.
Thank you so much for calling. Always wonderful to hear from you, Ari. Thank you very much for calling. So we had a Victor calling, and I'm sorry, Victor, you couldn't hold on. Wanted to look at PEG. I believe that's what's written. PEG is the PEG Public Service Enterprises. I years ago did this. I haven't got it notated. Just a side. Now, these sideways moves, I prefer to treat them as rectangles, and all I would say is I would not trade this until it retests close at 31.60 right now. PEG trading at 31.60, down 28 cents. My suspicion is that if it breaks to the downside, you want to be looking to see how 31.29 to 31.02, that whole 31 area, if that can hold, you will get, that's a tradable rectangle, because if it goes to 30.20, it's broken, that support, you don't want to be part of that. This is one of those things that has a bounce between an upper level that has a horizontal line, and that horizontal line is between 34, making a mini rectangle, and 34.79, and the lower line is between 31.29 and 31.02. And if you can get the bottom and successfully it turns around, you should have a trading move to the upside. That can stall anywhere in between. The one it's already stalled once, but if it can break into the 32s, then I'll say, ooh, this can go higher. At this point, if you ask me, would I even start a position here? My answer would be no. I would just wait. I don't like that failure pattern on Friday. If it held even halfway into the huge move between 31.79 and 32.45, and then closing at 31.88, if it can get, if PEG can trade into the 32.01 area, then if you want to nibble, I'd say good. Now it's trying to fill in that wick, the wick of Friday. But otherwise, I wouldn't be touching it. So I hope that answers your question there. The Boston Symphony Orchestra starts a new program on Tuesday, tomorrow night. It's finished with the Golozhov, Osvaldo Golozhov. He's a local composer, or international composer who lives locally, either in Newton or Brookline, and just an unbelievable, wonderful, wonderful composer. And it's just very interesting. The piece itself ends, it's all about St. Mark and Jesus, and then it ends with the Hebrew psalm, the Kaddish, right at the end. It's just a brilliant piece of music. I suspect it's going to be one of the 21st century breakthroughs culturally, because it's pushing music that is classical music into the forms that is now this universal language of trying to adapt to all other cultures and include them, the period of inclusivity. So it's very successful. But I do believe it's a better piece to see because it's visual as well as contextually musical, that is sounds, but it is visual as well. So if you could see a little bit on YouTube, it'd be great. But it really is a piece that you got to see live. Okay, back to the market. So the IYT, what I was mentioning before, is the iShares Dow Jones Transportation Average Index Fund. Broke out in leg D, broke that long-term channel resistance line right there. Before it's gone to an F and a G, and it made 165% gain from the 38.28 2009 low, where it went to $100 at peak G in, was that July? July, the week of the 29th of the week, July the 29th of 2011, and then it pulled back 70 to 70.82. That's about a 30% decline. Then it starts leg A, peak A, peak B, peak C, leg D that it's in right now, and that's 70.82 to the high of 134.16 made today. So 134, that's 60, 134, that's 60 points. And so 64, wow. So the last gain was 165%. Now it's added to that with another huge gain. And that is the iShares, the transportation index. And that means that this week it's in leg D in the weekly chart, and the MACD is good, and stochastics at 96%. I have to tell you, calling a top in this market is going to take all the skills you've ever developed. And I'm going to go through a couple of things to explain what I'll be looking at, and I'll include the IBB, which is in leg C with the doji candle breaking to a new all-time high. I'll be back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. I was asked if I would look at longer term chart of the IBB. I've got the market vectors ETN, which is the BBHs. They finally smoothed it out and got all the chart correct. There was a big mess for a while. I just needed to check. So 8463, 8468. I'm not sure if I'm going to use this as a phantom peak. I'll explain exactly what I'm talking about in a moment. The BBHs made a high. It's so interesting that, biotech, and all of a sudden they come out with the BBHs, which is the market vectors. Biotechs back in, I think it was November of 2099, 26.89, and it soars in a single leg up to the March high that was the NASDAQ and the S&P high, goes to 50.87, then it plummets, goes all the way down to 15.88, July of 2002. So it's a brand new move that goes peak A, B, C, D, E, and then it goes alternate count FG, but I'm calling it an ABC, but it eventually goes to a D, combined D at 65.10, August of 2000, August the week of the 29th, no, it's a monthly chart, August of 2008, the 65.10, pulls back, and then there's a gap. Now, that gap is part of something happened to the BBHs. I just don't remember offhand. So that was down to 24.73 and 24.82. Oh, man, that's the restart. Okay, let me just finish this. I didn't actually do much with this chart because it got so messed up I started to use the IBB and the other one, which is the, I got it written down somewhere, STK. I'll find an STK. Anyway, then it starts a brand new move. It goes A, B, C, D. Now, I don't know if this is an instant restart. If it is, that means that this is a very important leg that we're in. So to compare it, let's go to the IBB and say, where are we there? There we're in leg F/B in the monthly chart. MACD is very strong. On-balance volume is making a new high. And the relative strength index is just slightly under the previous move up. So it's making a slightly lower low. Let me just double check here. RSI is 82.11. And at this particular moment, it is at 84.78. So this is concurring. It's at new high, all-time highs. So the monthly chart is really saying is about to look parabolic. The weekly chart is merely going up to the top of what I drew in as the Chapman wave inside track resistance line, right there. And it stopped dead at that level today at 242.94. It can go a tad high to 243.69. Then it starts to break out of that resistance. The daily chart, now this is very interesting. The daily chart I'd circled right there. And in fact, what it is, it went above. So the IBB, the NASDAQ iShares Biotech Index is in leg C. I'm going to be patient and try to wait for a D and then make some decisions as it stands. But there is just that slight chance that we're going into the hysteria phase, that there will not be much of a pullback and it could go higher, that maybe this isn't the top. I have to do a lot of work with a bunch of these tonight, going through the Genentechs, the CLGs, the GILD, etc., the whole bunch, the gamut, the Amgens, Biogen, IDEC. I want to go through them and see whether or not we're about to make some kind of a major top here in the biotech sector, because when this comes down, it invariably drags the others. And as they've gone up, they've been a greater part of most of the indices that they're involved in. And the RTH, which is the market vectors retail, I'm looking at this and saying, hey, you might be having a high-level consolidation here, but the technicals are starting to deteriorate. If you do not break above 61.36 this week, but instead take out 59, you close under 59, the RTH, the market vectors retail index, might be turning down. So I'm raising cash. I want my subscribers to be raising cash from here. Just got to be very careful. Folks, stay tuned. You've got great shows coming up. Larry Pesavento, you've got Dave White, you've got why am I forgetting? Daryl Martin, you've got Tom O'Brien, just a slew of great marketeers.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.